Hi, John from York Bay Financial Partners, looking at investment markets. Potentially a pretty big week for the US market. You've got the latest inflation data coming out at the end of the week. Now, in the last couple of readings, that has just nudged up just a tad. It's only about 0.1 each month, but it is on an upward trajectory, and that does potentially pose a few problems for the Fed. Because if it is running at around sort of 2.8, 2.9, that's well above their 2% target. But obviously on the flip side of that, you've got a weakening economy with rising unemployment. And that was certainly the reason that the Fed cut interest rates at its last meeting. But then going forward, if you've got rising inflation, it's going to be very hard for the Fed to cut aggressively further. Indeed, those were the comments echoed by Fed Chair Jay Powell in recent comments and testimony. And that certainly it seems to be an opinion shared by the majority of the Fed. Well, all of the Fed, apart from one governor there, Stephen Merritt, has just been appointed by Trump. He is, definitely a Trump person, and he's advocating for a 50 basis point cut. And really, interest rates should be about 1.5% lower than they are now. So that's really just Trump's man, just pushing Trump's, agenda, while technically still being employed by the White House. Now, Trump has suffered a couple of further setbacks. We've seen one of the late night talk show hosts reinstated by Disney. Also, as well, a court has dismissed the claim for Trump's claim against the Wall Street Journal for a $15 billion claim. But all the while, Trump is just trying to sort of deflect from his sort of falling ratings. It's also come out as well with the unsubstantiated claims that paracetamol, Tylenol in the US as it's called, has a direct link to autism. Now again, all the medical research is that Tylenol is the painkiller to take during pregnancy, and I say there is no direct link between that and autism. Now, what is interesting is that after the recent sort of Fed rate cut, interest rates in the US have actually started to nudge up a little bit. That 10-year is back at 412. The 30-year is 467, and the 2-year is back at 360. So that really does make that inflation reading at the end of the week really very important, because that does come in still a little bit elevated, and it's going to be very hard for the Fed to cut interest rates further, despite the pressure that Trump is trying to apply. And all the while, we've still got no resolution to the Ukraine-Russia conflict. Putin just seems to be doing pretty much whatever he wants and just really sort of baiting NATO at every opportunity. Also, as well, there seems to be no let up in the Israeli-Gaza conflict either. So oil is holding in around sort of 63.50 and change. Now, it looks like the UK did secure some pretty major investment coming out of the big US tech corps after Trump's recent visit to the UK, to the tune of around 50 billion US dollars. That's sort of companies like Microsoft, Nvidia, etc. You're pouring in some investment dollars into the UK. which is much needed. Now, after the recent spike in inflation, the Bank of England on a 7-2 vote left rates unchanged. But really the UK desperately needs lower rates. Now, in the EU, it's just a question of waiting to see, how these sort of US tariffs potentially impact on the economy, especially as we head into the winter months, with potentially rising energy costs. And that's against a backdrop as well, as I say, Putin really sort of baiting NATO and really sort of, flying into, restricted areas on the border. Now, in Australia, the employment data has just been a tad weaker over the last sort of couple of weeks. Well, the cash rate at 360, does that potentially see a further rate cut before year end? Although the ASX 200 has had a reasonable year, it's up around 11% plus dividends over the last 12 months. Now, here in New Zealand, after that much weaker GDP figure for the June quarter of down 0.9, potentially there is talk about a 50 basis point cut now at the October meeting. Now, if that is the case, that would take the OCR down to 2.5, and then potentially a further cut in November, or certainly a further cut in the first meeting of 2026. Now, previously, the sort of base for the OCR was considered to be sort of 3 to 2.7%. But to say, now the talk is, potentially the OCR could go down to as low as 2%. But also today as well, we get the new governor announced. Because as discussed here before, we've got almost like a two-tier economy. You've got dairy and horticulture doing pretty well, but the rest of the economy really is struggling. And for all the talk of sort of green shoots, etc., as yet it hasn't really translated into any sort of growth and pickup in the economy. Although again, there were some encouraging signs with actually job adverts actually starting to increase over the last couple of weeks. And if that forward momentum can be continued, potentially a bit of a pickup in the housing market as well with these lower rates and mortgage rates sort of falling, then potentially 2026 could see a little bit of growth coming through. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.